Hi there, welcome to Kneppy Invest Profit Downgrades. It's the type of announcement that all shareholders of a company fear to see that the company releases, because more than likely, when a company does release either a profit downgrade or a negative trading update, the share price can be absolutely hammered. We have seen share prices drop upwards of 50, 60% in one day on the back of a surprise profit downgrade. In today's video, I'm going to be focusing on two companies that released a profit downgrade or a negative trading update in the week leading up to Christmas. So these companies didn't release these announcements on the 26th of December. I'm just releasing this video on the 26th of December. The first company is National Tyre and Wheel, and in fact, both companies I'll be looking at in today's video, I did feature in my technical update that I did release on Christmas Day. So naturally enough, I just want to look at these particular announcements that led to a significant drop in the share price of both companies. Now, National Tyre and Wheel released their negative trading update on the 23rd of December 2022. It starts off okay. They expect revenue in the first half to be between 290 and 300 million, up from the first half of last financial year, which was 251. So if you just take the increase in revenue in isolation, this is a good trading update. But you have to keep on reading, because they are expecting a significant decrease in gross margins, down from 29% to 26.5%. And that will have a negative impact on operating EBITDA and operating profits. So they actually expect operating EBITDA to drop from $20 million to be between 13 and 14 million, and operating profit to be between $1 and $2 million, down from $8 million in the first half of financial year 22. They also mention here that operating EBITDA will actually exclude a non-recurring and abnormal EBITDA expenditure of approximately $700,000. So that's even lower. The reported operating EBITDA will be even lower than what they've mentioned here. Now onto the chart and the effect of this announcement on the share price. And really, the market was expecting this. And we know the market was expecting this because the share price has been a downtrend since February, when the company released their half-year results back then. So this would have been the half-year results for financial year 22. And before the release of those half-year results, almost 1 year ago, the share price was in an uptrend and actually reached a high of $1.63 just prior to those February results. Share price decreased by something like 15% on that particular day, and that was a catalyst for a shift in sentiment and a change in the trend of the share price. And then the share price kept on falling, moved into a well-defined downtrend, and has decreased from around about $1.30 just after they released that results in February, all the way down to around about 56 cents. In fact, it closed at 55 cents on December the 23rd, which was a 14.1% decrease from the previous day. So right now, the share price is in a well-defined downtrend. They have released a negative trading update. Some will say the negative trading updates or profit downgrades comes in threes or twos. So when you see the first one, expect to see more following it. I was a little bit curious what caused that 15% decrease when they released their half-year results in financial year 22. I just wanted to see what sort of numbers, and a lot of times it's just not about the numbers. It could be any sort of guidance the company's releases, or any change in guidance the company releases, maybe just some negative language in terms of their commentary. So I just wanted to see some of the numbers they were expecting. Gross profit margin will actually increase, but then you look at EBITDA, down about 3.4 million from 20.8 million. Net profit after tax and amortization, I presume that what that is, down from 10.2 to 5.9 million. Earnings per share down from 8.7 to 4.7 million. Dividend per share steady at 3 cents per share. Debt up from 18.2 to 45.3 million, and operating cash flow from being positive 10.7 million to being negative 4.3 million. So just based off the numbers alone, I can see why, if the market wasn't expecting some significant decrease in some of these financial metrics, why the share price was punished in February 2022. Not only that, National Tyre and Wheel is a highly volatile company. This is their weekly chart going back to when they listed on the ASX about 5 years ago. So they listed towards the end of 2017. And the share price back then was around about $1.30. And then during 2019, towards the end of that year, actually 2018, towards the end of that year, the share price fell off a cliff from about $1.20 all the way down to a low of about 38 cents. This was prior to COVID-19. So more than likely some negative news from the company, some negative financial results or something like that caused absolutely hammering to the share price. And then we saw the share price reach a low during the COVID-19 financial panic of around about 20 cents or just above 20 cents. And then good times happened for National Tyre and Wheel. Share price moved into a really nice long uptrend. Share price increased from about 20 cents to a high of $1.62, which was reached towards the start or end of 2021 or the start of 2022. And then since that high, the share price has been moving down. So right now with the share price at 55 cents, we are still, or the share price of this company is still well above pre-COVID levels. So that's something to keep in mind. And the other thing to keep in mind is just the volatility. So this company's share price moves in quite long trends. So we've had 2 or 3 trends right now, and this is the 3rd trend in the share price. And who knows when this particular trend will come to an end. And the other company that released a negative trading update, or more accurately, a profit downgrade, is Symbio. They released this announcement on the 20th of December 2022 after trading had finished for the day. And this particular title was Symbio announces trading update. A more accurate title would have been Symbio announces profit downgrade, but that sounds significantly worse than announces trading update. But this was the very definition of a profit downgrade. And if you ever see an announcement released by a company that says profit downgrade, run for the hills, because the market will punish any company that releases a profit downgrade, and Symbio is was no different. I actually started following this company about 10 years ago when they were My Net Phone. Then they became Symbio because they went through, I'm not sure if you can call it a restructuring, but they sold off some parts of the business, and then I think they bought some other parts of the business and whatever. Not even sure what they do, but it says here that Symbio is a leading voice communication software provider. Now, this company is experiencing some significant headwinds, and they actually decreased their expected EBITDA for financial year by 25%, decreasing from between 36 and 39 million to between 26 and 30 million. So no matter the profit downgrade, so 25% doesn't sound all that much, you will see a significant reaction from the market. I think the share price fell 37% on the back of this particular profit downgrade. They also gave some reasons in regards to why they're now expecting EBITDA to be 25% lower than previous expectations. So for instance, the first reason was that several US-based global software companies returning unused phone number inventory in Q2 or the second quarter following COVID-related bulk orders during 2020-2021, restoring normal operating levels. That sound like that this company was a beneficiary of COVID-19, and now those benefits have come to an end. And it's a complete opposite. Instead of benefits, it's now, what's the opposite of benefit? It's a disbenefit or unbenefit. I don't have any idea what the opposite of a benefit is. But anyway, it's the opposite of a benefit. And the second reason is that the new deals are taking longer to finalize. And I think a lot of companies are going to be seeing that more and more often. And not only that, I think we're going to see more and more profit downgrades and negative trading updates coming through. So these type of announcements and these types of reactions from the market, I think are going to become more commonplace over the next 3 months or so. And just like National Tyre and Wheel, Symbio's share price was already in a downtrend before the company released their profit downgrade. In fact, the share price has dropped 80% from the highs we saw back in November last year. $7.50 was the high, to the share price right now, which is $1.50. And not only that, the share price dropped about 38%, I think it was 37.7% on the back of this particular profit downgrade. And then the next day, it dropped a further 7%. So almost 50% drop in 2 trading days, and the share price is at long-term lows right now. So you can just look at this chart and see the share price was in a well-defined downtrend before this particular negative trading update. And leading up to this trading update in the past year, the company hasn't released any negative financial news. I think just the market was expecting some negative financial news. The overall weakness in the market also helped this downtrend in Symbio's share price. Now to the long-term chart for Symbio, and this goes all the way back to about 2011. In fact, in 2010, the share price of this company was hovering around about 10 cents. Not a lot of interest in Symbio, who were known back then as MyNet Phone. But then something happened in 2012. I started following the company then. They were releasing Appendix 4Cs back then. And if you follow the cash receipts of MyNet Phone back then, you'll see a steady increase in cash receipts. The company was operating cash flow positive, free cash flow positive, and then they announced a dividend because they were profitable. And that really was a catalyst for a re-rating in this company's share price. And it was a long-term re-rating because the share price went from 10 cents back in 2010 to a high of about 7 cents towards the end of 2017, start of 2018. So in about a 7 to 8 year period, the share price was a 70 bagger or near a 70 bagger. That's the sort of returns you want to see in a company you own in your portfolio. But then the good times ended back towards the start of 2018. Share price became a little bit more volatile, moved out that uptrend, and then we didn't really see any well-defined uptrend or even downtrends. We did see a nice little uptrend during 2021. Share price went from $4.25 to that high of $7.50, and now we've seen a really good, pretty powerful downtrend with the share price falling from $7.50 to the current share price of $1.50. Not only that, if you look at the last time the share price was $1.50, you have to go all the way back to 2013, just after the share price moved into this well-defined uptrend. I just had a look at the market cap of Symbio. We're talking about a market cap or a valuation of just over $120 million. So I am actually going to take a closer look at this company because, in my opinion, this company was overvalued because when you look at the profitability and the revenue growth, it wasn't that impressive for the valuation. But when you talk about a valuation of just over $100 million with EBITDA, even though it has dropped or the expected EBITDA has dropped about 25%, I still think there could be some value for this company once it gets out of these headwinds. And so unless these are structural problems, and I think the likelihood these are structural problems in regards to the business itself, I think it's fairly low. Once this company gets out of these short to medium term headwinds, I think you might see the share price start to move up again. Who knows when that's going to be? And you will see the market completely overreact in these sort of times when a company does face short to medium term headwinds. And these are the times you will see some value. And Symbio could be one of those companies. Doesn't necessarily mean it will be. We'll have a sort of a rebound in the share price. We'll move into a new uptrend. Is a turnaround story. Just a possibility it is moving forward over the next, say, 3 to 5 years. That's all I have for this video, looking at 2 companies that released negative trading updates or even a profit downgrade in the case of Symbio during the week leading up to Christmas. So even though it says 26th of December 2022, I'm just releasing this video on that date. Now, I am looking out for trading updates and profit upgrades, profit downgrades every single day the market is open. This is the time of year we will see a lot of these sort of announcements released from companies. So be on the lookout for these announcements because they are the most powerful announcement that a company can release in terms of negative and in terms of positive. So keep it out lookout for them, and more than likely I will do more videos on companies that do release some negative or positive trading updates. If you have any questions about both companies I featured in today's video, just leave those questions in or thoughts or whatever in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.